Hey, Roscoe here. Happy New Year to you. Well, some big news just came out last week, and I want you to understand what all of this means. You know, most buyers and sellers don't realize it yet, but this housing market may have just cracked wide open last week. All right, so quick heads up, because what happened last week could be the first real unlock moment we've seen in this housing market in such a really long time. Mortgage rates didn't just drop because inflation magically vanished, no. Rates moved because of intervention, because money flowed into the bond market. And if you're a buyer or a seller thinking about 2026, well, you need to understand this, because the people who move early usually are the ones who win the most. So if you want me to run some numbers for your situation, what lower rates might mean for your payment, your buying power, or if you're thinking about selling and you want to know what those net proceeds might be, send me a message here and I'll help you build a plan. So here's what happened. On January 8th, the president instructed Fannie Mae and Freddie Mac to purchase $200 billion in mortgage-backed securities. Now, here's the part that most people miss. Mortgage rates are tied to the bond market. They're not just banks waking up and picking a rate, no. And they're not directly set by the Fed. That's something we all kind of think is the case. But here's how it really works. When demand for mortgage bond goes up, bond prices go up. And when bond prices go up, yields go down. And when those yields go down, mortgage rates, well, they come down as well. So when a major player steps in and says, hey, we're buying a huge amount of mortgage-backed securities, it puts real downward pressure on rates, and it can move them faster than normal. And the speed of this move matters. The government doesn't usually step into housing like this unless they think the market is at risk. Because when rates stay high, it doesn't just hurt the buyers, it freezes our entire market. And when housing freezes, well, the economy slows. So this wasn't just a clickbait headline, it was an actual signal. Another important point, the Fed lowering rates doesn't automatically lower mortgage rates. What really impacts the mortgage rate is liquidity. Now that's how many buyers are in the market for mortgage bonds and treasuries. Then there's also something called the spread. Now that's the gap between the 10-year treasury and the 30-year mortgage rate. Now when that spread starts to shrink, mortgage rates can fall even if everything isn't perfect. And the big goal here is to keep pushing those rates down enough to get that psychological threshold that gets people moving again. So let me talk to you sellers right now, because this is a piece a lot of homeowners really do need to hear. Now I've heard it from a lot of folks right now. Most sellers have been stuck in the lock-in effect. You're thinking, if I sell, where do I go? And why would I trade my low rate for a higher rate? But here is what history shows. Demand's going to come back before supply. And the sellers who act early, well, when buyer confidence is starting to rise, well, they're often going to get the best leverage. But once everyone realizes the market is shifting, more homes come to market, inventory increases, and leverage can normalize again. So if you're a seller who paused, canceled, or said, well, we're going to wait for the rates to come down, this is exactly the window to start watching and getting a plan in place. Okay, for you buyers, you already know the number one thing that people have been saying to me for the last couple of years. Hey, Roscoe, we're just going to wait for the rates to come down. Well, here's what's going to tend to happen when those rates do come down. When buyers see a 5 in front of the mortgage rates, it creates a psychological green light. This excites the market. More buyers are going to jump in, showings are going to go up, but your competition is going to increase, which is going to lead to higher home prices. So yes, while lower rates can help your payment and increase your buying power, but it's also going to bring back more buyers and competition, which will push that pressure back into onto the prices in certain areas here in Colorado. So that's why developing a strategy really does matter. Okay, so here's my takeaway for you. We may be entering the first real opportunity to unfreeze a market that's been stuck for many years. And the people who benefit the most are the ones who get informed and positioned early, not the ones who are going to hear about this last. And that is why I'm sharing this with you right now. I want you to stay informed and get ahead of the rest of the market. After all, My job is to take care of you and help you find a great home and a great deal, and hopefully keep some money in your pocket. Now, if you're a seller, I'll show you how now is the time to start positioning your home for maximum demand. If you're a buyer, I'm going to show you what rate changes can do to your buying power and how to move smart before the rest of the crowd. So text me, DM me, or message me the word PLAN, and I'll put together a clear next step strategy for you. I'm Roscoe Drabousky, and I'm here to help you find your way home.